I think a well-balanced portfolio needs to have active ETF and then probably some private stuff. Look, we do these capital markets assumptions. We revisit it every quarter. And, our expectations for the next 5 years that you're going to get 3 to 5% or kind of 4 to 6% on large cap equities. And
is that including the dividend?
That's including the dividend.
That's horrible. We're going to do better than that.
You need to get more. 5 years.
You need to get more.
If we have a lot of juice in the next year, because we have a significant reform to corporate taxes, and everyone can mark up their earnings, and everything's looking great in the U.S. Wonderful, but we're talking about kind of a 5-year cycle for our capital markets assumptions. And the chances are that we will go through the next part of the business cycle during that period.
You are a child of the last 8 years, I think. You're inured to this. Do you remember the mid-'90s? We had 3 years in a row that were over 30%.
Yep.
Remember? Can't we have 1 year of over 30%?
Joe, I'm an equity bull, not just because I'm an equity strategist.
That 3 to 5% is not an equity bull.
We're
over 5 years.
We're talking about that over 5 years. What I'm suggesting is, in the near term, if we can get a real improvement in earnings, particularly coming out of the U.S., and global growth looks a little bit better, higher than a lot of the economists' forecasts, I think we're in pretty good shape. Mm-hmm. But we need to recognize that we've pulled forward a lot of returns. There's a lot of expectation baked into the market.
But we didn't have any returns for the last 2 years.
We've had a great year in 2016.
Right, since November. But prior to that, we were churning for 2 years. We got nowhere.
Same level. We didn't go anywhere.
We also had an earnings recession, and we had a real slow period in terms of U.S. and global growth.
And then we're going to hear, unfortunately, or fortunate for the president, he gets to pick the low for when he came in. So it looks like he's been the greatest thing for the stock market ever.
Right.
But if you took it, prior to the financial crisis, we really haven't done that much in the last 10 years.
Look, the real key is going to be what happens in terms of regulation in the U.S. And does, less regulation lead to this return of animal spirits? We were talking before when Anthony was on about consumer confidence hitting the highest level in 15 years. But you're starting to see small improvements in business confidence. For me, the real kind of show me moment is going to be, can we translate that small uptick in business confidence into spending, into investment? Does it just come in terms of cash return strategies, to shareholders? Or is there actually a much more kind of forward-looking program that involves investing in businesses for the long term? That would make me really excited about the potential.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.